Hey, what's up everyone? Welcome back to my channel, and in this video I'm gonna share with you the strategy that got me funded. Okay, I passed my Apex Apex Trader funding account with this strategy. You can see a certificate on the screen, and yeah, so I'm here to share it. It's a really high probable strategy, so let's dive into it. Alright, so basically we will need three time frames for this strategy. Okay, you can either use 4-hour M15 and M1, or you can use daily H1 and M5. Okay, or if you are a high time frame trader, then you can use weekly H4 and M15, and if you want to trade on the H1, then you can use like monthly, daily, and H1. It's literally gonna be the same. Okay, it's literally gonna be the same. There's no difference in the win rate or anything like that, so it's your own choice to choose whichever time frame you want to trade in. Okay, alright, so first of all we need to have a bias. Okay, we need to have a high time frame bias. Okay, we cannot trade without a high time frame bias. We must have a high time frame bias. If we don't have a bias, we are just gambling. Okay, so first of all we need to have bias, and that's what we are gonna get in from 4-hour chart. Okay, so I'm an M1 trader, that's why I'm using 4-hour as my high time frame. Okay, you can use daily or monthly. Okay, if you are like H1 trader, you need to have monthly to get your bias from. If you are M5 trader, then you need daily to get your bias from, but I'm an M1 trader, so I need H4. Okay, I need H4 for my bias. Right, so first of all you wanna see where the market is heading. Okay, on the H4 chart. So in this case right here, you can clearly see that it's going higher. Okay, it's going high. We just need to understand where the market is heading. We just need to have a look at what the current trend is. Okay, we don't need anything else, and that's what's gonna give us our bias. Okay, so let's say we have liquidity right here. Okay, so to the left side of the chart, and the market is trending higher. This is gonna suggest that market is gonna take out this high right here, and it's gonna get into that liquidity. So we are gonna have a bias first. So in this case we are having a bullish bias, and if I inverse the chart, it's gonna be like this for a bearish case, and this is, let's say, your sell side liquidity. Alright, so let's get back into the bullish chart. Okay, so you want to have like a 4-hour bias. You want to see how where the market is heading. You just want to look at the trend. Okay, and you want to have a drawn liquidity. So let's say this is our drawn liquidity. Okay, then you want to head into the M15. Okay, you want to head into the M15. Now this right here, okay, this is how this chart on the H4 is gonna look like on the M15. Okay, this is how it's gonna look like. It's this leg right here, it's gonna look something like this. Then we are gonna have retracements, then expansion, retracement, expansion. Okay, then retracement, expansion, retracement, and then expansion right here. Now once you have a bias, okay, let's say the market is here. Okay, the market is here, and you have a bullish bias. you're not gonna you're not gonna anticipate the market to get right here. Okay, why? Because if you see, okay, when you are here, if you see, the previous trend is actually bearish on the M15 chart. Okay, it's actually bearish, so you want to wait for this chart right here to get bullish as well. How are we gonna determine that? We're gonna determine that by a market structure shift. So you're gonna wait for an M15 market structure shift. Okay, so once that happens right here, this is where your opportunities lies in. Okay, this is where you are actually gonna get in. So first of all, okay, market's heading higher, then it's gonna retrace. Okay, in this retracement phase you will see that the low time frame direction is actually bearish. Okay, so the high time frame is bullish, the low time frame is bearish. Okay, you don't want to get in at that time. Okay, you are gonna wait for a market structure shift, and once that market structure shifts on the M1 happens, that's where you are gonna look for your entry. then it's gonna expand higher, then it's gonna have retracement once again. So you have to wait for a market structure shift once again, and then go to the M1 to look for entry. Then once again it's retracing, you're gonna wait for the retracement to be over, and then this is where you can look for your entry. Now you can directly enter from the M15 market structure shift, and then when it gets into discount or premium, okay, you can buy or sell from there. But for very high probability trades, I like to go into M1 after M15. So kind of your choice, but the strategy that got me funded was actually using M1 as well. So basically, first of all, you want to have a high time frame drawn liquidity. You want to know where the market is heading. Once you get that, so in this case, if you are seeing this chart, you clearly know that the market is going to this high. Then after you get your higher time frame drawn liquidity, you are going to get into the low time frame. On the low time frame, which is our M15 in this case, you are going to get into you are gonna wait for the M15 to get bullish as well. So you don't want to participate in the retracements, okay? You don't want to participate in these legs right here. You want to wait for retracement to be over, so we indicate that by a market structure shift, and once that happens, you're gonna get into M1 and then look for entry. Now I have already explained my M1 model in the market maker models video. That video will be linked in the cards, okay? At the top right corner you will see it right there, okay? So you want to click there and then go to my video. You will find my M1 entry model right there. That's the exact same model that I use, and that's how I got funded, literally. Okay, now let's get into examples of these, okay? And I'm gonna show you examples in which I've actually traded. I'm not gonna show you some hindsight examples. Right, so this is our first example right here, and this is the H4 chart. You can clearly see it's heading higher right here. It took out this low, expanded higher, then it got into this 4-hour order block and showed reaction from there. This suggests that the order flow is bullish and the market is heading higher, so our trend is actually bullish. So now we have a clear drawn liquidity, which is this high right here, okay? Then we're gonna go into the M15 chart, and once a market structure shift happens, this is where we are gonna get bullish. So first you see it was retracing, right? And then when a market structure shift happened, then you see clear expansion to the upside. Now, and here is my entry. This is where I entered, and this is where I sold back in partial, first partial right here, and final fully closed right here. Now for you to understand this entry model, you have to watch that previous video of mine in which I explained the market maker models, okay? And this was shared in my private Discord as well, okay, in my mentorship Discord. Well, this is our another example. So you can see a clear bearish trend, right? So the market is just getting into periods, rejecting lower, taking out highs, rejecting lower, going into auto block, rejecting lower. Now we go into the 15-minute chart. We have a first market structure shift right here, then we get another market structure shift right here as well, and then the price gets into a fair value gap, okay? Then for the entry model, okay, I just wait for a red on a short-term high, then market structure shift, and then expansion lower, and this is where I sell it, and this is where I close my position, okay? Then this is my another example right here. So I didn't share the 4-hour chart in this, I don't know, for some reason, but the 4-hour was also bearish. It was literally the same as this, okay? I took this trade somewhere, I think it was right here, I don't remember, but it was somewhere around here, okay? So 4-hour was also bearish, so it was going lower, and 15 was also going lower, okay? It takes out this high right here, market structure shift. Then for entry model, I just use my own entry model and sell it right here, and I close my position right there. Here is another example. Now I'm showing you examples from NQ, but that doesn't mean that this doesn't work on any other market. It works on any market. You can use it for any market. It's your own choice. Now we have 4-hour chart right here, it's currently bearish, right? So it made a market structure shift, the trend was bearish as well. Okay, then this trade happened, I guess, right here. Okay, uh, it made a market structure shift on the 15-minute chart. Okay, then I waited for the market to take out the high. Okay, then I got into the M1 chart and then looked for entry right there, and I bought it back. I took a partial right here and then finally closed it right here. Here's another example from Forex. Okay, so here's the daily chart, it's going lower, so you can kind of see the trend, market structure shift, clearly going lower, expanding lower towards this low right here, and there was fair value gap, so price was actually gravitating towards that fair value gap. If I go into the 1-hour chart, you can see that it took out this high, then expanded lower, then it made a market structure shift right here as well, so it took out this liquidity, market structure shift, and then expansion lower. It made an intermediate term high as well. Okay, for the entry I got into the M1 chart. Okay, and then I just entered right here and bought it back right here. It's pretty simple, guys. Like, this strategy is very easy, and that's literally how I passed my challenge. So let me break it down once again. So first of all, you want to have like a high time frame directional bias. Okay, that high time frame can be your H4 chart if you are an M1 trader, that can be daily chart if you are M5 trader. Okay, and if you are like an hourly trader, then you have to look at the monthly chart for that. Okay, so you have a directional bias. Now you know where the market is heading. Okay, it's either to the upside or downside. Then you go into the low time frame chart, which is either going to be your M15 chart or any other. Okay, based on your trading style. For me, it's going to be M15 because I trade on M1. Okay, you wait for the retracement to be over, and once that retracement is over, you look for entry on the very low time frame, which is the M1 chart. Okay, it's literally that easy. So I will recommend you guys to do not act on it without any back testing or testing it out on demo. Okay, I will always recommend you to first practice this strategy and then use it on your live account. Now this is not a financial advice. Okay, I'm not giving you any financial advice, take it on your own risk. Okay, now if you have any questions in this model, okay, you can go into my Discord server, the link is in the description. Alright, so this is it for this video. See you later. Goodbye.